Hello, everyone. Welcome to episode number 93 of Going Live with Good Soil. Hopefully, internet connections are working well this week. Last week, I was on vacation and a little spotty internet connection in the hotel there, but I think it went okay for the most part. Matt, we got a lot to cover today in the hour we have, and we're going to try to cover as much as we can. So starting with the macro market, interest rate expectations, that's been the big thing for a while now. I think the consensus right now, according to the futures market, is that there's one last 25 basis point hike in May, and then a pause. So I think that's sort of, I think if they don't hike it in May and they pause now, I think the market will receive it a little, somewhat positively. I think if it starts getting priced in that they're going to hike another 25 basis points in June again after that, I think the market, could go down in a few percent. I don't think it's going to be as drastic of a change as it used to be when there was like changes to what the consensus is my point. Do you think just adjusting the consensus by another 25 basis points up or down on the terminal rate, do you think that makes a huge difference to the market at this point, Matt?
No, I mean, on the terminal rate, no. But I think the real question is, do people believe what the market is saying out longer than just the May meeting? So you're right that the market is pricing in one more 25 basis point hike. But then if you look at the longer term expectations, it's for cuts beginning either later this year or early next year, and kind of getting
Hmm.
back down to like the 3.5% range. Um, which the Fed has been saying all along, like, no, that's not what we're going to do. They're going to be, higher than people think and for longer than
For
they
longer.
expect. So,
Hmm.
so interest rate cuts later this year. I think Powell's been doing everything he can to say no, that's not that's not in the cards.
Yeah.
So, like, what exactly happens in May is probably not going to be as impactful, I think. But if there's
Hmm.
any sort of softening of the language, I think that would be exciting, because then that could give more confidence that the market's view of rate cuts later, that would gain a lot more momentum if Powell essentially signals as much.
Hmm.
Um, and to me, with like the data points that we've had recently, inflation is definitely coming down. We had
Hmm.
some negative PPI print, I think,
Yeah.
for March, which is kind of a leading indicator in a roundabout way to CPI. And
Hmm.
then CPI was a little bit better than expectation. I mean, marginally.
Hmm.
But to me, it seems like we're kind of we beat this thing. It's going to take a while for it to show up in the data, especially with the lag in the way that CPI is calculated. But
Hmm.
I think eventually they're going to have to change course.
Yeah. Yeah. I think so too. I think it's a matter of if there's some major recession impact, and we've talked about this before, and I kind of think it's this rolling recession. That's been the term that's been thrown around, where different segments or different sectors of the economy kind of have their own little bubbles burst here and there, but the overall economy is still somewhat healthy as a big picture. And I think if that's the case, then I think they do keep rates higher for longer. They don't have any reason to lower rates. But if there's more of like a crisis created with, like, let's say unemployment starts going up pretty quickly, then I think they'd be likely to lower rates sooner. But if absent something like that, some kind of like national recession crisis, versus just the consumer real estate sector crashing, for example, absent some kind of bigger picture recessionary crisis thing going on, I kind of thinking they're going to keep rates high into next year. I'm not sure how the stock markets react to that, though. I think earnings earnings season is going to hopefully start dictating the stock market again soon. We'll see if this earnings season, which is just beginning right now, is going to dictate the mood of the market. I guess that's where I hope we get back to. Instead of interest rate policy, I would like actual fundamentals of companies to hopefully dictate the market. So we'll get there
Yeah,
soon enough.
yeah, we will, and that's, I think, one of the exciting things on the horizon is potential productivity increases. I mean, this is something that's been on our mind. I think for the last several years, is the kind of advent of AI, and the
Yeah.
exponential increase in technology is going to kind of increase the earnings potential of all the companies and of the economy overall. So GDP is going to, increase, I think, faster than almost anybody is expecting, over the course of the next decade. Over the course of the next 6 months, it's anyone's guess, but that is,
Mhm.
I think, something that at least a worldview that seems to be gaining wider popularity now, just with the advent of Chat GPT and stuff. But I'm curious, like, how real is this moment in AI? I mean, it seems like it's has the potential to be overhyped at the moment, but it also has the potential to increase earnings power in labor productivity and the economy as a whole.
Yeah, it's certainly overhyped. I mean, at the moment, does the overhyping now justify where this generative AI technology is going to be taking us in the next 3 to 5 years? I don't know, but I do know this generative AI technology, which I think of as like neural networks. Um, with transformers and diffusers, these are like this is like a new technology of AI, and I do think it's going to transform productivity
Yeah,
of businesses dramatically. Dramatically is like a subjective word. Is it going to increase business productivity where they can cut half their workforce and still be just as productive, or cut 80% of the workforce like Twitter did with Elon and be more productive, even though they're not using generative AI like that. But, there's a lot of room to improve businesses. And I think businesses, this is like serving it up to them on a silver platter with this generative AI technology. And I guess I would throw the question back on you, Matt, because this is something we talk about and think about is like, we agree, I think, and most people agree that productivity of businesses are going to dramatically, whether that's 100% improve or 500 or 1,000% or 10,000% improve, but productivity is clearly going to improve dramatically of
yeah,
all of business, that's taking advantage of this technology and employing it. Now, according to, based on stocks in the stock market, that should be good for the overall stock market and earnings power of stocks in general, right? We think. And but in terms of actual individual companies or stocks, is there any we think that are going to benefit more than others, or less than any that could get hit hard, or any that could benefit greatly from this? I mean, anything that we're thinking about that we want to talk about here?
yeah. How much detail should we go into? I mean, we
Well, I
have
think
some
we
ideas
get
that we've
yeah. I
we've
mean,
spoken about privately, but
yeah, the one stock we actually really like, which is not like some, and this is not investment advice for anyone. None of this is investment advice, as it showed in the disclaimer of our YouTube channel thing in the beginning. But we do really like Microsoft. I mean, that's not other people have mentioned that too. We're not the first, but the more we study this with their partnership of OpenAI, who is the first leader advantage of this Chat GPT large language model assistant,
Mhm.
technology. You and I have subscribed. Lots of people are subscribing. Not just that, but then like imagine, Microsoft is like an incredible vessel for this technology to be delivered to enterprise, agreements, through
Yeah,
its Microsoft Office suite, and
yeah,
they're already Bing is already being rumored to be the top search engine on Samsung phones pretty soon. So there's all this, I would say, momentum for Microsoft being so early and jumping on this soon. And the CEO of Microsoft, he's incredible. Like he's transformed that
yeah.
company from like that company was headed toward the way of IBM.
In the
That
Steve
company,
Ballmer days, oh my
yeah,
gosh, it was
that
just like,
was headed the wrong direction fast. And this
yeah.
the new, Sundar Pichai, that's his name, right? I'm saying it correctly. Or
I thought it was
is that
Satya Nadella.
Google's?
Satya
Yeah, Satya
Nadella.
Nadella. Yeah, Sundar Pichai is Google's guy. Satya Nadella is Microsoft's CEO, and he's, I just know ever since he's taken over, I've been watching, and it seems like a very intentional turnaround story for Microsoft. So it was headed the way of IBM, in my opinion, but it's really made the right moves and competing with Amazon, competing with all the market leaders. Now it's going to compete with Google in search, and Google is the other. heavyweight in AI. If you saw Elon Musk's interview on Tucker Carlson last night, it was really good. He talks about the two heavyweights, Google and Microsoft now. And I think Microsoft's, got the momentum. They were not a heavyweight, but now that they have this partnership with OpenAI, they are. And it just seems to me like Microsoft has a lot going for it to be a huge benefactor. That's what we like that company in the, it's not going to be a 10x return probably anytime soon in the stock itself, but we think it could be a
Yeah.
2 or 3x return within a couple of years at the most. So we think it's like a good business as it is, and then you add this on top of it, it's like it seems like a really pretty decent, stock to take advantage of AI. But there's probably lots of small
And,
stocks out there, but this seems so obvious, right?
and something I could not have imagined us being bullish about 2 years
Yeah.
ago. Like,
No.
imagine like the 2021 Emmet and Matt having a conversation about how Bing's about to disrupt Google
Yeah.
search. Like, that's not,
Yeah. That would be like a Saturday Night
like
Live skit
a farce.
silliness.
I'd be like, oh man, I don't trust the judgment of these two.
Mhm.
Now it's not going to happen all at once, and I don't think like Bing's going to get 80% market share or anything like the way that Google has right now.
Mhm.
But the fact that there are pretty clear early indicators that a decent amount of search share is going Microsoft's way this time, and that's just
Yeah.
one use case. I mean, there's the actual subscriptions to ChatGPT, which Microsoft will get an outsized portion of the profits on that. But then just imagine you're a company like Microsoft that has a bunch of real world problems and just like workers who can augment their workflows by using this technology. And you can
Mhm.
imagine if this is so useful to outside people like you and I mean,
Yeah.
I opted to subscribe to the paid version. I think it was just yesterday on Monday because I was like, I just want to stay on top of this. It's worth it to me, and I'm actually
Mhm.
finding that much value out of it. Um, and so it just like there's so much that can be done to kind of leverage the efficiency of their employees or to solve some problems that Microsoft might be facing on top of external like customer facing applications that people will be willing to pay for. So yeah, there's just a huge amount of upside, and I think I used to have this like mindset, a little bit of a tangent, Emmett, but I used to
Mhm.
think like, okay, $1 trillion market cap is like as high as any company can go, and so I would
Yeah.
kind of think about companies like I
That's
remember
the end
for
goal.
Tesla.
It doesn't go higher than that. Yeah.
Exactly. And so for Tesla, I remember thinking when I was skeptical, I was like, okay, they're $50 billion. I could see them getting to a trillion, but not higher than that. This was maybe like in 2018 timeframe.
Yeah. Yeah.
Um, and so I was like, so I don't, to me, it didn't make sense to invest in something so risky that,
Yeah.
you could like 20x was the cap. And I thought there was a decent probability they'd go bankrupt at
Yeah.
that time. Um, but so like, but now if you think of how powerful these new tools are, like who's to say you couldn't have a 20 billion or 20 trillion market cap or 100 trillion market cap company,
Yeah.
at some point down the road if you're actually
I'm
providing that
drawing
much
the limit at
economic
10
value.
trillion. 10 trillion is
In
the
the
limit
in the
now.
near term, I agree with you. I
Yeah.
certainly do. In
Yeah.
Microsoft, I don't even think Microsoft will hit 10 trillion in the next couple of years, but I don't know that there's a huge amount of potential here. And I mean, I think Tesla is the most obvious beneficiary of a future where like the whole economy just changes. This is something Elon has
Mhm.
talked about. If Optimus really takes off and you got
Yeah.
autonomy, and it's just like
Yeah.
you've got free labor essentially, like
Yeah.
what does that do to a stock price or to the economy overall? It's just like it's
Yeah.
completely unparalleled.
Yeah. I mean, you can see Microsoft I could see Microsoft getting to 10 trillion in a few years if this technology is proves to be what a lot of the hype is pumping it up to be right now. I mean, they're going to be the biggest benefactor when people are creating, um, using OpenAI's Chat GPT technology to like the newer version GPT-4, Auto GPT, maybe GPT-5 when that comes out, which I heard they're training already. So people are going to be using that to do jobs. You can, and that thing can replicate itself. So you can create a million like travel agents basically that are all doing everything online for you. They just live in the internet and they can do everything. The cost of maintaining that travel agent is essentially zero, just the electricity, or the server, and Microsoft might employ a whole bunch of them. Microsoft assistants are just doing everything for everyone. And us as the consumers of that pay a small
Yeah.
price, but Microsoft's getting like 100% margins on all of that. Or they split it with OpenAI. I don't know how that deal works out exactly, but it's like Microsoft could be the
Uh,
hugest benefactor of this new technology, is what I'm thinking. And in
yeah.
that case, from a software standpoint, They are the king of everything software, internet related pretty soon if this technology continues to take off, I think. So 10 trillion, I think, is very doable in a few years.
So how do you think about, the business upside and the investing upside compared with, you mentioned Elon Musk on the Tucker Carlson
Yeah.
interview, and obviously he's been very unabashed in his criticisms of OpenAI before. Um, is it Do you kind of think of it as great investing opportunity, and as an investor I can't be held accountable for, or I can't plan for, any kind of like Terminator style, like end of
Yeah.
civilization. Like,
Yeah.
how do you think of the risk associated with it, given what Elon has been talking about lately?
Yeah, it is certainly a moral dilemma, I will say. I mean, if you believe that Microsoft is not the best, gatekeeper of this technology, and investing in Microsoft stock or whatever is not helping the cause, but part of me is like a doomer, like an AI doomer, a doomer of nuclear war, a doomer of everything. And that part of me keeps me safe,
Yeah,
in some ways, but that part of me is also not realistic always. It thinks of the worst case scenarios, but they're not probable in a lot of ways. Now,
yeah,
I don't know if this AI I'm still unsure of this AI technology being probable to kill humanity or not, to be honest. Like, I don't think it's probable we're going to die from nuclear war in the next few years with Russia, but I still think it's a significant, 5% chance that it could happen in the next 5 years, Um,
hmm,
so, you know, so I don't know for sure about where I am in the AI space, but knowing myself and that tend to like to focus on apocalyptic event things that could happen and obsess about that stuff and get scared or whatever. I know that that means it's probably not probable, but if that makes sense. So for that reason, I don't have a problem investing in Microsoft from a business
yeah,
standpoint, because I have to be more realistic in the real world where we are
yeah,
today. What I know, and what I know
yeah,
is the world's not ending from AI anytime like that we can see right now. It doesn't mean that Elon's not seeing behind corners we can't see yet. I can't say for sure. Like, I don't think he knows everything all the time. He doesn't know about advertising being educating Tesla. Like, I'm confident that educating the public on Tesla would be hugely beneficial to the mission and consequently to Tesla margins, but more important to the admission of a sustaining energy to the public. So there's certain things I disagree with Elon that I feel sure of, but I don't know where I am on the
yeah.
AI doomsday thing. What do you think, Matt?
Yeah, I think of it in similar terms. Like, I see the points that Elon is making. I'm not convinced that OpenAI is this evil entity. They're certainly not evil. There's no malintent. Could it get out of hand? Yes.
Hmm.
But I kind of think of it as like, we're not going to do anything to stop it. So, so maybe
Yeah.
the diversified portfolio for these unknown situations is,
Yeah.
90% AI and Microsoft and 10% bunkers. Like, invest in a
Yeah.
physical bunker or something like that.
Yeah. 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 And
Um,
investing in Microsoft stock, when you think about it, like, it's not gonna I don't think it helps them. Like, getting Microsoft stock higher, I'm not sure, like, by buying more of the stock, for example, I'm
yeah,
not sure driving that market cap valuation, that makes it more likely that this AI dooming event is going to happen, because Microsoft doesn't need to raise capital ever again. Like, they're not going to raise capital. I
yeah,
mean, I guess all the employees of Microsoft are going to be happier when they see their, retirement, their stock options go. I don't know exactly how that domino affects, the likelihood of AI, helping AI destroy us all by buying Microsoft stock. I don't see the exact connection, but there's probably some correlation, some connection, like by 7 degrees of, connection. I don't know. So, but let's move
yeah,
on from this. We've been talking a lot. We got to move on. We got a big agenda today to try to get through, right? So, is there anything else you
yeah.
want to mention about this AI stuff, or I guess traditional valuing companies in the traditional way, right? We wanted to talk about that, about how that's probably going to become obsolete soon.
Yeah, I mean, that's another idea that we've been talking about, in our live streams and to our investors for a long time, is, the traditional ways of doing, even like the risk-free rate. I have a
Yeah.
problem with, which is like a cornerstone of investment theory. is that like you need a risk-free interest rate, and then you kind of build up your cost of equity and your discount rate essentially from that risk-free rate, which is essentially the 10-year treasury. And I think with where we are right now in the world of a completely unsustainable like fiscal path that we're on, monetary whipsawing up and down between QE and QT, and the fact that we're facing a debt ceiling vote in 2 months, which does not appear to be resolved. We're kind of hoping that people will be reasonable and raise the debt ceiling. But kind of given that background, I think using U.S. Treasuries as the risk-free rate is like, I understand the logic of it, but I don't think it's like an ironclad rule of finance. So I
Mhm.
think things are going to change eventually down the road, and I think the earnings power of companies is one thing that'll surprise. I do think we've touched on this before. There's going to be like a lot of roadkill in the next 10 years, and there's going to be a lot of companies that 10 or 100x, because they're
Yeah.
going to be gaining so much market share, and
Mhm.
doing so at like ridiculous margins because of the efficiency offered by these new technological tools. So,
Mhm.
thinking of like a diversified portfolio and like, average S&P PE of like 20, to me, like those kind of rules are not long for this world. I think there's going to be a lot of companies with like a PE of 5 or 2, and then I think
Yeah.
there's going to be some that have like 100, and
Yeah.
they'll just be growing like crazy. So,
Mhm.
yeah, it's hard to say exactly how it's all going to shift, but I just have a feeling that the previous 100 years, which is like really what all the like investment theory has been built on, of like the average equity returns of 8% per year going back to the 1920s. I don't know. I just have a feeling things are going to change.
Yeah.
Potentially, they'll be higher than that going forward.
Yeah. This would be a great I agree with you. This would be great to see what Drew Dixon, thinks about this when we talk with him next month for our 1 year kind of anniversary check-in on that Tesla Bull Bear
I have
debate.
a feeling he'll be a dissenting voice in that
Yes.
worldview, but
Yeah,
I
it could be
love his,
something
his
we
views though. It's a great
discuss.
conversation.
Yeah, yeah. No, I think that's true. It's not going to change overnight. But this decade is the decade where things are changing for sure on valuations of stocks. Assuming we
Mhm.
survive this decade, and it doesn't destroy us first, which could happen. It seems like. So, um, Tesla. We'll move on to Tesla. This is what everyone follows us for. Shanghai workers were upset about not getting a particular bonus. They're told because of some safety issue. Elon is trying to squelch this right away and saying he's looking into it. I haven't heard anything else since then. There was a tweet about it yesterday where Elon responded, but I haven't heard anything else. What are your thoughts about this? Is this an issue? No issue? What do you think?
Yeah, so I don't know how serious of an issue. Like it's very hard to get a read of, is sentiment among the workers in Shanghai like super low. I
Hmm.
don't get the sense that it is, but it does seem to me that like the fact that Elon is getting feedback like this through Twitter, essentially, I think that's a really good sign.
Yeah.
Yeah, because I've been in situations in the past where like management just didn't communicate with the employees on the ground about like why something was happening, and it was just like that lack of communication was more of an issue than the on the ground issue itself. So I'm really hopeful that this is that Elon can actually quickly resolve this, but it did kind of come on the in the background of Tom Zhu, who very clearly has been heavily involved in Shanghai getting a massive stock award. So I could
Yeah.
imagine, there could be some rumblings on the ground of the employees saying, "Oh, we don't get our bonus," and Tom gets
Yeah.
millions of dollars of Tesla
Yeah.
stock. Like, what the hell is this? So
Yeah. And I
I
read
think
the
getting that
bonus.
right.
I forget the exact Chinese yuan amount, but it equates to about like $300 for the quarterly bonus. So it's not a huge payday miss. I mean, for a Chinese worker, they make a lot less than an average U.S. worker, but I think that differential, that delta, is not as big as it used to be like 10 or 20 years ago. So, but $300, it's meaningful. It's not like $3,000 being cut from each of their performance, year-end
Yeah.
performance or whatever they would get. So $300 is like a quarterly bonus, nice to have. They could buy some stuff, but it's not it certainly is not good for morale to be shortchanging your employees, I guess. And Elon's looking into it. But yeah, Tom Zhu got a huge employee stock award last week revealed, and some kind of title I think was up, given to him officially as well. So he's clearly at the table with Elon and Drew and, senior management at Tesla. I think he's number two behind Elon, but
I
that
was just
remains to
going to
be
ask
seen.
you: is he the undisputed number two now, or is Drew Baglino still in that mix? What do you
No,
think? Is
there is no official number two
Yeah,
undisputed, I think, publicly, but I think my guess is behind the scenes he's the undisputed number two now. That's my guess. What do you think, man?
it does. I agree. I mean, it seems to be that way. I mean, um, it'd be interesting to see if he's on the earnings call tomorrow, actually, because
Yeah,
that's been an indication recently. And I think he can't really be the number two if he's not on the earnings call. So that'd be
yeah.
interesting to see.
It's possible he's on the earnings call, but doesn't say like one thing. That's possible. He
Yeah,
doesn't seem to like, unless he's prompted to, unless someone prompts him to. Like he's not as outgoing. I'm not so sure. Like when maybe he is. I don't know. We'll find out more. I guess as he gets. He talked at Tesla Investor Day and he talked very clearly. And apparently he was very nervous, but he seemed to do just fine.
yeah,
Yeah,
yeah. That was kind of good to see because the reports were he was incredibly nervous backstage, but I think he came off really well actually.
yeah,
Very
yeah,
easy to hear, despite English very clearly not being his first language. I thought he
yeah.
articulated some
Imagine.
complex topics very well.
Yeah, imagine how nervous you would be. Like, put yourself in the shoes of if there was some massive Baidu Chinese company you were playing a big part of. You had to go to China. You spoke Chinese, but it's your first. You haven't really been to China much, but you're in China, and you're like suddenly like the top favorite employee of the head of Baidu, and you're at some massive investor conference, and now you know the company inside and out, and you know everything, but you have to like talk in front of audiences in China, and like I would be so nervous. Like it would just be
And
like,
it's like the most viral company in the world, so millions
yeah,
of people are going to watch this, even
yeah,
outside the room that you're in. Like
yeah,
it's
yeah.
daunting, and I think he handled himself really well.
I think so too. Yeah. So, all right. So, what's next on the
We
agenda with
got
Tesla?
earnings tomorrow.
Earnings. That's the big thing. Yeah.
So
You have a
we went
revised estimate, right? But we're not going to go through your
Yeah.
model, but you lowered it a little bit, right?
Yep. So we did a detailed model walkthrough about a month ago. So we're not going to walk through all that, but essentially what changed is the actual delivery number came in. So I updated the model with that. Took a look at a lot of the other assumptions. The only significant one that I changed also was adding a little bit of a benefit from foreign currency translation for this quarter, which I'd assume it was just neutral before. So those two changes dropped the earnings. I think it was 90 or 91 cents when we presented last time. So I dropped it to 87 cents with those two changes in the model. So pretty much in line with where Wall Street is right now. I think last I checked, they were at 86 cents. So yeah, it's the first time I can recall ever me being so close to Wall Street. So I hope
Yeah.
I'm wrong. I hope the optimism that I've had for the last two quarters ends up showing up here. But again, the way that we do this is just go through every single assumption line by line and say, what do we think is the most probable number here?
Yeah.
And so, we went through there. We took out 1,500 of cost of goods sold. Could do a little bit better than that, but I wouldn't bank on it. And
Yeah.
so, in my mind, it's like a good kind of middle of the road number.
Yeah, I think the stock is mostly focused on. I used to think it was what automotive gross margins were for Q1, which we're focused on too. Where like 20% seems to be around the over under 50-50 line. So hopefully they beat 20% for Q1. But I think the stock
Mhm.
is mostly going to, now that they had these recent price cuts and more recent price cuts, they just put in place. I think people are a little worried about gross margins
Yeah.
getting squeezed more, and so they got to put some kind of guidance out, or if not in the guidance in the letter, they got to answer in the call. That'll be a top question, I would think, by analysts and such. That um, are your gross margins going to continue to be 20% going forward, given your new price cuts and anticipated future price cuts? Like, are you
Mhm.
lowering prices in line with the lowering your cost of goods, lowering your cost of goods services to produce the car? And we think they're lowering cost of goods to produce the car, but not in line with these price cuts. We think that they're
Yeah.
cutting prices 10% where the cost of goods might be lowered by 5% or something, let's say. So in reality, they're giving up significant margins still
Mhm.
by lowering the prices. That's sort of what we suspect from a practical, realistic point of view. And if they say we're gonna, our margins could go down, if they give any opening to like saying like margins could get lower, we don't really know. what commodities are going to do in the future. If they say something like that, then I think the market will see through that and be like, well, that means margins are coming down further and the stock
Yeah,
gets a hit.
definitely. Yeah, that's the number one, two, three, and four questions I think on this call are okay. What's
Yeah.
the gross margin ex credits this quarter, and then do you have the cost reductions in line to support your margins going forward? Which you told us you did in Q4. That 20% gross margins was going to be sustainable. So if they're all of a sudden showing a chink in that armor, yeah, the stock could definitely get hit hard. Um,
Yeah.
on the other hand, if they say like all these cost cuts have been enabled directly by kind of like one for one cost of goods sold reductions, then you would actually see margins improve just with the way that math works.
Yeah.
Um, and that would be an incredibly strong message for them to have. Now, I don't think they've
Yeah.
got that level of of cost cuts in the works, at least for
Yeah.
this next couple of quarters. I think long term they absolutely do, but that's the question I think is just
Yeah.
how do those margins hold up?
Yeah, and I think if it's kind of the bearish side where they're like, yeah, we don't care as much about margins as getting mass adoption and lowering prices to be more affordable or something like that, then I think the stock could go down to the 150s is my guess. If the whole macro market's crashing, it could go much lower. But if assuming the macro market's not crashing, kind of like sticking around, because earnings aren't too disappointing, let's say, across the board for other companies, then I think Tesla could get down to the 150s. But like you said, if they're saying we're dropping costs in line, the stock might rebound. It might go to like 200 plus, pretty quickly. So yeah, it's sort of short term. I'm worried about the stock price, but long term, it's still a great investment. Still going to go up a little big. But the next, if they're lowering, compressing margins, and they signal they're going to compress margins further with more price cuts potentially, then for the next 6 months or a year until the Cybertruck really comes out and starts getting, mass produced, I'm thinking the stock could get into the mid to low 100s even. So unless the
Mhm.
the macro market really rebounds, but we'll see.
That
We'll
that
see.
that might be a phenomenal opportunity too. Because I was having
Yeah.
these exact same thoughts before we spoke today, Emmet, and was going through the model action. Assume, okay, what if the cost cuts are more severe and the margins are even worse than we were expecting? And I'm still just going through the math and thinking, okay, even still, there's going to be a pretty significant increase in earnings next year and
Yeah.
beyond when you've got Mega Pack ramping and you've got Cybertruck. I think is going to be very strong margins. Maybe not initially with that initial part of the S curve, that's never super profitable. But imagine by Q3, Q4 of next year, how much that's going to be contributing when they're scaled and
Yeah.
doing so profitably. I mean,
Yeah.
that's when I think you're going to start really seeing the earnings growth compounding again, like it had been doing for so long up until this year.
Yeah. Absolutely. Um, so there's some stay.com questions. Do you want me to read a couple? We were gonna look at a couple of the questions. I mean, all the other YouTubers look at the top 3 or 4 questions. We're gonna go to like questions like 5, 6, 7, 8, or something like that. Just like read them and pretend like we're Elon answering the questions, like how we would answer it. Because we think,
This could go horribly wrong, but it might be a little bit
yeah, it's
funny
kind of an
too. So
experiment. It's sort
let
of
us know either way.
between Saturday Night Live entertainment skit and between that and investment research. So we're gonna answer it like we really think he's gonna answer it. I don't know about you, Matt, but I'm gonna try to impersonate Elon when I answer it. But you can just use your normal voice or try to do impersonations if you want. I have a terrible impersonations. It's the
I'll
same
probably go
voice
for
for
the
everyone.
impersonation and then get embarrassed at how bad it is and back off immediately. But let's
Yeah,
just give it a shot. We didn't rehearse
yeah,
this.
yeah. No, we didn't rehearse it. So there's a top 3, 4. Um, You said the fourth question is actually a good one, but we won't go over that one. Can you provide updates regarding the solar roof production expectation, or you want me to answer that one? You asked me, and I'll be Elon answering it because I think we know.
All right, sure. Yeah, can you provide an updates regarding solar roof production expectations and future goals?
Yes. Solar roof. Solar roofs have been much harder than we anticipated. The installation is actually very manual, and it's just the roofing contractors have to be trained, and it's just not as easy to get manual labor these days. And just not as many people want to work as hard, and we're working hard, and we have some exciting things coming, and a new version coming out very soon that I think we will all be excited about. And it's really good to to combine that with the power walls, especially in California, you have this special arrangement now. So more to come on that in future quarters. We're still excited about it.
All
What do
right.
you think? From 1 to 10, what was that? Like that seemed accuracy from the content of what I said. What'd you think?
Accuracy, the content I think was pretty good. Some of the phrasing I think he would have phrased a little bit differently, but I'll give you a 7, and with the
Okay.
understanding that I think I'll be like a 6 or a 5 because I'm
Okay.
impersonations
When I
are
do,
not
I
my.
figured out I practiced with my kids in the car doing an Elon impersonation this morning, and I figured out what I do is I put my hand on my chin like Elon does sometimes when he's thinking, when I pretend to be
So
Elon.
feedback from the comments, you got a 1 and a 4 are the two numbers we got so far. So.
Well, I think the content was like a 7, but the impersonation itself was probably like a 1. All right, let's do the next question. I think the content is what people are here for. We're just kind of being silly about how we present it, but the content is what we're serious about. So I think that's seriously how he would answer something like that, like try to be, you know, bland, like kind of general, and there's new versions coming out. It's hard to get same thing he said in the past. I don't think there's like really anything meaningfully new to update on that. So the next question, I'm going to ask you now. You're going to have to answer. You can just talk over. Okay. You previously stated a goal to reach 80% of the Tesla car owners with Tesla insurance. When will the goal be met? What is the adoption rate of Tesla insurance where it is available? And what is the average annual savings over third-party insurers?
Yeah, I think the thing to keep in mind with insurance is it's not all about being a profit center. This accent is a disaster.
No, good. Keep
Uh,
going. That's good.
um, we do think that we'll have reasonably good margins on
The
on
stutter is
the
perfect.
insurance
You're doing the
business,
stutter just like him. Keep
but
going. Keep going.
but ultimately the goal is to advance the advent of sustainable transportation, and the insurance piece of that will lower the total cost of ownership, and that is really the goal, so that we're providing as much value as possible to our customers. And so we think that the insurance product is the best way to do that, because it was becoming a pain point for our customers, where the insurance companies were not capable of providing accurate pricing based on the risk profile of our customers. So we had to do it in-house, and so that's what we've done. It's not going to be a massive profit driver going forward, but we do think it will be important in advancing customer demand and lowering the total cost of ownership.
And I'll be the Tesla investors. That's perfect. I'll be Tesla. And Elon, what about the third part of the question? What is the average annual savings over third-party insurers?
I don't know, Zach. Do you have that?
Uh, yeah, Elon. So the average price is
Keep going.
right at about $600 per 6-month frame, and we have a 13% take rate on the states where it's available, but we're expanding that pretty rapidly. We'll be in all 50 states soon.
Oh, that's so great. All right.
I love Zach, but he's got such a nerdy loser voice. You gotta.
No, I don't. I mean, we all have nerdy loser voices, but you
I
did a
do,
great
yeah.
impersonation of him. You did a great impersonation. He's super smart. He's on the ball.
He is.
All right, you want to ask me the next? We'll do one more each, and then we got to go to the serious stuff again.
Okay. Yep. All right. So let's go right on to the next one after that. So, are your cost reductions and deflationary input prices on commodities outpacing auto MSRP reductions to your liking now and for the foreseeable future?
Well, we cannot. We cannot forecast the future of commodities. If anyone could, they would be the wealthiest person on earth. So we are doing the best we
That is a
can.
great line. That is.
We are doing the best we can, and we, now that we have tier one suppliers, we can assure you that uh, the foreseeable future reductions will be not exactly in line, but they it's hard to get the timing right. Let's just keep it at that. It's complex running an auto business with thousands of moving parts, where any one part, if it's wrong, delays the entire production line. So let's move on to the next question.
That was really good. I'm going to give you a 9 on that one.
Okay. All right. Last question here for Matt now doing the impersonation of whoever Elon's going to answer. Okay. Last question is, this is like the 9th question on say, I think. With all the recent positive news on Megapack production expansion, can you give an estimate on how much you think Tesla Energy will add to overall revenue this year?
Well, this year I think it's important not to be focused on the short term. I mean, yeah, how much this year? Who cares? We're doing this for the long term. And if you look at the size of the global automotive industry and you look at the size of the global energy industry, it is orders of magnitude larger. And so that's the opportunity. So yeah, if you're trying to trade this year to how much Megapack revenue is going to be in 2023, yeah, don't invest in Tesla stock. Just we don't care. But if you believe in advancing long-term transportation, the sustainably, then Tesla Energy is going to be a bigger company than Tesla Automotive, and mega packs are going to be a massive part of that whole equation. So, dumb, boring, boneheaded question thinking about this year, but overall, mega pack is going to be an amazing product.
That's why we call it the Mega Pack. All
It's not the micro pack.
We'll call it the
Or no,
Giga Pack
micro stack.
next.
He'd say it's not a micro stack; it's a mega pack.
Yeah. Giga Pack is coming next. All right. That was funny. All right, let's get back to serious stuff. I mean, that was serious. The content was serious. We seriously believe the content of those answers was how he's going to answer it. We just tried our best to impersonate him. That's all. And Zach, you did a great job with Zach too. So, all right, next on our before we go into Q&A for the audience, we wanted to touch on Starship and a little bit about Twitter and Roblox potential. So, Starship do you think there was some secret plan to delay that, to really make that a wet dress rehearsal so that it could launch on April 20th? That's just conspiracy thinking. I kind of think there's a small chance that maybe Elon or some people said, let's make sure this doesn't work so we can reschedule to 420. You know, like I kind of wonder if that's the case. Do you think that's possible?
So I think he wanted to make it like a full dress rehearsal. And I think if there was not something that went wrong, he would have said, let's like stop it anyway. Like somebody posted a meme that like, had me cracking up, and it's like Elon in the control room is like, looks like we're gonna have to cancel. There's a frozen valve. And the engineer at the computer is like, where's the frozen valve? And he's like, anywhere you like. You know, like
yeah.
I think he absolutely wanted to, but like you don't want to get to Thursday and then have like an actual problem happen. So maybe they actually found a frozen valve, maybe they didn't, but I'm guessing they probably did. And so catching this thing beforehand is certainly a good thing.
But I'm excited. It's the day after earnings, right? That's in a couple of days. We're going to see the real Starship. So we'll talk more about that next week. Hopefully it goes off. And then the other thing was in Twitter, before we get to Q&A for the audience, in Twitter, and then we want to touch on something kind of cool with Roblox maybe. But on Twitter, the subscriptions went live, or I guess subscriptions were live before, but now they're like Elon's endorsing them and saying everyone should do. I don't understand exactly. I was tricked into sign up for a 3. Now I'm paying like $20 or $30 a month on some subscriptions. I don't really know why.
Who tricked you?
I feel like I was tricked, advertisingly tricked. Like the content is good. I like James Stevenson. I like Stephen Mark Ryan. I like Sawyer Merritt, and I like Elon. You know, I subscribe to them. I'll probably subscribe to, but all of a sudden I'm paying like $30 a month on like extra content, I guess. I don't know, extra VIP access to Elon, maybe. I don't know. It's like a combo between. I'm kind of lost about what I'm paying this extra money for. I don't think I'm going to keep it up forever. I feel like I'll probably take off subscription sooner or later. I'm just excited for this new moment in Twitter history and subscribing to some things. I mean, what are your thoughts about this?
Yeah, so I kind of thought the same thing. I was like, yeah, this is like a good thing for Twitter. And I think it's actually overdue. Like if you actually are a content creator, you essentially just got used by Twitter without getting any part of the compensation. So like I think you're right. I actually didn't subscribe to anybody, but I noticed that Elon had his subscription and he did like a private subscriber only thing. And I was like, oh, I wish I had subscribed and gone on to that. Funny side note, he's making more money from his Twitter subscriptions than from his Tesla salary because he doesn't even cash that. So I just thought that was like kind of funny. But I think it's a good idea. Like I'm curious. So I haven't done any of those. Like, are you finding any value out of any of them? I'd imagine like the content creators themselves are trying to figure out like, what do they do? Like if you're Farzad who's doing this full time, what are you doing only for your Twitter subscribers that you're not going to do for your YouTube subscribers or like your Patreon supporters? So it makes things a little weird potentially.
Yeah, it's too early to tell. I think what they have to do is decide I think you're gonna have to draw a line, and these people are gonna have to decide, do I want to make all the content I make that I think is valuable, mostly paid for, or do I want to keep most of the stuff I have, free and available, so I get more notoriety, more famous, first, and then switch it? Or, I think having multiple, like Patreon and Twitter, is too crazy and complicated. And maybe some super fans will sign up for all this stuff for you or something. But I don't know, and I don't know if this is a good or bad thing necessarily. It's sort of a new era of content in Twitter being born, and I'm not sure the birth of this is has a lot of legs or not. Like, you and I are going to stay, at least me and Good Soil, like we have on our YouTube channel. We don't have subscribers that like have to pay. We don't have Patreon. We're not going to do a paid subscription. I'm not going to do a paid subscription. I
No.
mean, maybe in the future, but I'm not planning to ever do a paid subscription for anything I want to talk about. But I'm also not trying to make a living off of this. So my incentives
Right.
are different. People that are trying to make a living off of showing content, that's a different incentive model than someone like you and I. I think our incentive model is very relaxing in some ways, because we can just be open. We don't have pressure to create some issue out of nothing so that people click on it, So
Yeah.
I think it's a different incentive model. And so I'm not exactly sure. I guess I'm just threw up a lot of weird ideas, but
Yeah.
we'll see where it lands.
I think it's a good idea, and it might fall flat, but I think Elon and Twitter are certainly going to learn something from it, and that may morph into something else, potentially even something to do with Roblox.
Yeah. Let's move on to Roblox. So Twitter and Roblox. Matt, do you want to share your screen real quick? Do you have this queued up?
Yep. Yep.
So everyone who's
So
on YouTube Live, and maybe we can tweet the Twitter. I'll tweet it on the chat of the. If anyone's on Spaces, not on YouTube Live, I have the tweet here as well. I'm gonna tweet the link to this on the Twitter thread too. So this picture,
is it
you
showing up,
describe it,
Emmet?
Matt. It is. Describe what you're seeing
Okay.
while I'm tweeting this out to the thing.
Yeah, so this is from at Molgull, who's actually part of the Roblox developers for hire group. Shared this image on Twitter, and it's essentially like a digital metaverse in the Roblox universe, town square of sorts, but with the Twitter bird logo right in the middle. And then on top of that, or not on top of that physically, but to the left of that, there's another little building that also has the Twitter logo, and it has the words HQ on it. So it's it seems like there's some sort of Twitter HQ, Twitter metaverse potentially being introduced on Roblox. At least this is what was developed, and in the comments that accompanied the photo, it says, this is a small sneak peek of what I've been working on. A lot of huge things coming. Hopefully a lot of it will be cool for the community and immensely helpful. Also soon we will explain everything to be transparent. So a little bit cryptic, but potentially big news for Roblox. I mean, what are your thoughts on this image, Emmet?
Yeah, I just tweeted it in the thread for the Spaces if anyone wants to see that. But yeah, if you look at the picture, you have the Twitter bird in the middle, which is kind of cool. And at first, that's what you see, and you're like, "Oh, that's neat," And you and I, Matt, I had to talk to you, I explained, no, look at the top left. And if you look at the top left, it's not just a Twitter bird logo in the middle, but you also see a Twitter bird on top of a building that says HQ, so like Twitter headquarters, right? And so there's something to this, and I don't even remember, it was an interview Elon had done. Maybe it was BBC, the BBC interview, or one before that, just before that. Someone asked Elon, like, "Oh, are you going to keep the Twitter headquarters there in that main building in San Francisco or something?" And Elon was like, "For now." He just said for now, and left it open ended, there's something more to it. I don't know. I was reading between the lines. I was like, that's interesting. The interviewer was trying to get Elon to say, no, we're going to move to Austin, Twitter headquarters to Austin too. I think that's what they were thinking. Elon's thinking he's going to do. And Elon didn't say that. He just said for now. And maybe there's more to it. Maybe they're going to create a virtual office, a physical one, I'm not sure. That's possible. That's just wild idea. But the other idea we were thinking of, maybe it has something to do with spaces, right? Because you know, wouldn't it be kind of cool if like you were on, you had like an avatar with a bunch of other avatars? You can see Elon's avatar talking, and how many you can actually see like in like a virtual versus just like, looking at a number
Mhm.
that you're not even sure is correct or not, and trying to figure out how many digits, is it 5 digits or 6 digits? I can't quite tell, and it's hard to process in your brain. Like it, 60 people listen to us on Twitter Spaces versus 6,000 people on a Twitter Spaces, or 600,000 on Elon's Twitter Spaces, so it'd be kind of interesting to
Yeah.
see if there's something to that, maybe the spaces and using Roblox somehow, virtual avatars. I don't, but there's something
Yeah.
here. I mean, anyone in the comments have ideas? I mean, this is not some accident. I mean, the username, the source of this, the username from this, if you look at the tweet, is from uh, Roblox _ RTC, or the guy. Small sneak of what I'm working on. So this guy works for Roblox RTC according to his profile, right? And Roblox RTC, he mentioned in the comment, is like an official Roblox Twitter account with 668,000 followers. It's like a huge Twitter account for Roblox about, a network dedicated to the best Roblox, connecting the community of developers and such. So
Yeah.
there's something here.
So when we were talking about this yesterday, Emmett, I was like, I don't think Elon would be at all interested in like a digital workspace for his employees, because he's said many times about the importance of being, in office, for like productivity and to like be close to all the processes and everything. That's probably less important with Twitter than, like on Tesla, obviously, or SpaceX. But I kind of think it's less likely to be an internal kind of like digital headquarters. But I think the spaces idea makes a lot of sense to me the more I was thinking about it. I mean, we were both saying how Elon is pretty aware that spaces is not great right now. Like, it's pretty good and it's useful. We use it a lot. But like, there's a lot of functionality that's lacking. It's glitchy. People can't hear us sometimes. We've been dropped out of these things randomly. And, it's just not like an amazing interface. But the other thing I noticed while we were talking is like there's a stage over here in this picture with like seating around it. So what if you had a Twitter Spaces where you and I are on the stage and you can physically see all the different people in the crowd? So like when we see regulars like, Melody of 1974, or like whoever else,
Boiled
or
down
someone like,
Harry
yeah,
Chu. Yeah.
they have a physical avatar
Farzad.
that we could
Yeah.
start recognizing, and Roblox is doing a lot of really interesting stuff on like facial recognition and kind of making the projection of your digital face match what your actual face is doing. And so it could be an interesting way, like if they tried this out, like a spaces that was actually in the metaverse. I think that's actually a pretty cool idea, and one that I think some people would certainly try.
Yeah. Yeah, I think so too. So it's something to keep an eye on. We caught wind of this, saw this. One of our followers, who's been very helpful to me, DM'd me about it, and I thought it was really interesting, and thought about it for a few days, and realized, we should touch base and just talk about this. See if anyone on the comments has any interesting ideas about it. But let's go to Q&A for the audience. We got about 10 minutes here for Q&A. Is there anything else you want to touch on before we go to Q&A, Matt?
No, I know you've got a hard stop in 10 minutes, so let's just dive into Q&A.
Yeah. All right. From Falling Knife Catcher on Twitter. When will analysts start upgrading their Tesla price targets based on Megapack? Matt, what are your thoughts? I think it's going to be a little while, but what do you think, Matt? Like 2 quarters from now, maybe 2 or 3 quarters is my guess, but you probably have thought about this.
In my mind, it really depends on the pace of like revenue recognition from the deployments and the margins. Because I think for the longest time, no matter how fast the Tesla Energy grew, its margins were 0%. So it's like, who cares? Just ignore it. But now they're roughly 10%, and so the analysts have to give a little bit of credit for it. But what they're definitely not doing, if you do the math of their projections, is like saying, okay, there's 80 gigawatt hours, actually probably closer to 100 gigawatt hours of Megapack capacity announced that'll be online producing revenue in the next 2 years. And that's like $50 billion. It's like a number that you can't ignore. So they are ignoring it right now, and I really think that that's unsustainable. But like, I think Tesla Energy needs to surprise a little bit. I think you need to start having like $400-500 million of gross profit coming from Tesla Energy, and then the analysts will start taking a deeper dive and say, okay, that's starting to be meaningful on the earnings per share figure. So let's model this out in more detail. I think right now most just don't even bother modeling it because it's, historically hasn't mattered. So I think we're closer probably than you do, Emmett. We're certainly like years away from this really being like $50 billion of revenue. But I think the analysts are going to have to start updating their models to account for it because it's coming and it's real.
Yeah. It'd be interesting to see when they do it. All right, next question is from Kevin King, YouTube comments. Why did Elon create a new company for AI? Why wouldn't he develop it under the Tesla umbrella using FSD technology and Dojo? I mean, I think there's no question Elon crosses all of his technologies of his companies. SpaceX is used in conjunction with Tesla for materials or production manufacturing and vice versa, probably. So I think that there, some of the FSD technology and Dojo, development capabilities will be used with this new company as well. But I think it's simpler for Elon to make it, just a new private company. When you have when you have to do things under a public company umbrella, it just adds a whole lot of extra scrutiny, a lot of extra reporting necessary requirements, and I think keeping that private just makes it a lot simpler for him to move it forward and more flexible, and if that makes sense. But I think all the companies will be able to; they all benefit off each other to a large degree. But it would be nice if we could invest in that new AI company somehow. But I guess he's got a lot of private investors that have invested in it, but it's not a public invested company.
I do think it's interesting though that he put it in a very large order for some GPUs from NVIDIA instead of using Dojo, because I mean Dojo is essentially built to handle problems like these that can scale up really quickly, and it just seems pretty clear that they're not there yet. Obviously, the Tesla FSD training isn't using Dojo yet. They're kind of working on getting that switched over. But I remember Elon said a couple of years ago that the real test for whether Dojo is successful or not is, does the autopilot team actually want to switch over from using GPUs to using Dojo? So I think it's just not quite ready for prime time yet, but maybe it will be eventually.
Yeah. Next question from Mav Ace on YouTube. Question: with Tesla increasing production this year by 40%, but earnings staying flat year over year, is the bull thesis dead for the short, medium term? That's sort of what we were talking about in the beginning with earnings, that we think, if they're guiding down on margins, the short, medium term bull thesis is dead, and the stock could get to the 150s or below, in the near term. And that could be 6 to 12 months until, I think, when Cybertruck starts getting like mass produced, that's sort of like the next almost sure thing in my mind that's going to help drive the stock back up, assuming they can produce these Cybertrucks cost effectively, which I think that's the whole point of this Cybertruck. Is there's a lot of manufacturing efficiencies, the paint, not needing to paint it, and there should be a lot of efficiencies in manufacturing that, and having to have great margins on the Cybertruck, and with the huge demand backlog. So I think worst case, for the next 12 months, the stock could be in the crapper. Hate to say it, but I'm a huge long-term investor, and I still believe in the company. But it's possible the stock could take a big hit in the next 12 months, is what we're thinking. Is that where you're at, Matt, or what do you think?
Yeah, it is interesting. I was just looking at the analyst expectations for this year and next, and I mean, it used to be the case that analyst expectations for this year were like 386 or something like that, and for next year it was like 6 or 550 or something like that. But as of right now, current year estimate is, actually, sorry, I was looking at the wrong thing. So current year estimate is 388. The next year estimate is 544. So the analysts are actually expecting a return to pretty meaningful growth next year. So the stock market is always forward looking. So I think the real question for whether the stock is in the tank for the next 6 to 12 months is, do they need to continue doing price cuts, and are the margins going to get squeezed? Because if that's the case, and you're going down to like 18% automotive gross margins in 2024, then these analyst estimates of 588 or 544 for next year are going to be revised down lower, and that's going to keep the stock down. But
Yeah.
if 544 is a good number for next year, then I think, or the analysts believe it is, and my model right now shows it higher. But if people think that that's a reasonable number, then I think the market there, I think the stock could actually rally, even if we have a bad Q2 and a bad Q3, because they're going to say, okay, yeah, things are rough right now, but they're going to get a lot better.
Yeah. All right, let's do one more question here. This is from T Nelly on the YouTube comments. If you could place a bet for 1 million that robo-taxis will be fully operational nationwide within 5 years, would you actually take the bet? If not, what's the earliest date for you to accept the bet? I would take the bet. 5 years, I would take the bet. 3 years, I'm not sure I'd take the bet. I mean, I think it's, 2.5 years, 3 years is like my 50-50 of when, because again, we've talked about before, the robo taxis technology might be ready for prime time, like next year even, or later this year possibly. But then I think it's going to be another like 2 years before, maybe another year before everyone's really comfortable using it, another year plus for regulators to allow it, so it could be 3 years is like the 50-50 over under. So 5 years, I would not take the bet. What do you think, Matt?
Wait, 5 years you would not take the bet? I thought you said you would take the bet.
Oh, 5 years, I would take the bet. Yeah. If it was under
Okay.
3 years, I would not take the bet. Yeah. Sorry.
Yeah, to me that seems like a reasonable date for that metric. The surprising thing is just like how slow the development in the last 2 years in particular has been. The rate of improvement from from an actual driving experience standpoint has not been like amazing. Like it certainly has been good over the course of the last 2 years, and it's a lot better now than what it was. But it's not like I would have guessed 2 years ago that we'd be at the point where I'm hardly ever intervening anymore. But we're still in this zone where like it drives uncomfortably in many situations, and I am intervening pretty frequently. Usually just for convenience, not for safety issues. But it just is like so awkward that you want to take it over just because you don't want to be rude to people around you on the road. But so the question in my mind is, do we believe that the pace of innovation is going to turn around now? And I think it is, just with the huge software rewrite that went on, the fact that they've really automated this labeling process so much, and then there's been this massive breakthrough on LLMs and on the all the different tools that they have in their tool chest to attack this problem. But I think that's what the question comes down to: is the pace of improvement going to really accelerate from here? I think it will, and so I guess I long-winded answer of saying, yeah, I think I would take that bet.
Yeah, that makes sense. All right, so next week, this time we'll have earnings. We'll see how the stock has digested earnings, and I'm keeping my fingers crossed that the cost of goods services are coming down.
Cost of goods sold.
Cost of goods sold is coming down. COGS, the acronym COGS, is coming down as fast as the price cuts. I don't think that's probably the case. That's wishful thinking, hopium, but I'll be happy to be wrong on that, and that is the case. So if that's the case, the stock hopefully will be positive, but assuming they're going to have to show guide down on margins, or the market's going to have to read between the lines that margins are coming down, that
really,
it could be lower.
The metric to optimize to is operating margin, and so that's what we're going to be focused on for now. I mean, we want to get to scale. Obviously, not everyone can afford a car. That's why we're trying to bring the price down. But we're going to do it in such a way that we're optimizing for operating margin.
I like it. All right, we'll work on our impersonations for next time. All right, guys, good chatting. That was my favorite part. Okay, talk to you guys later.